This in the Loop, I'm going to have a chat to Bradley Conn. He's going to share with us his top tax tactics for FY 2025. What's your number one thing you talk about when you want to talk about tax minimisation with your clients?
Tax minimisation, it's one of those things that everyone wants, but sometimes we don't know where to start. I think for business owners, John, the big thing for me is business structure. If you don't get that right, it can cost you a lot of money in tax. Corporate tax rate in Australia for SME, small medium enterprises, is 25%. Individual marginal tax breaks is 47%. So, there's a big gap there. So if you get that right, there's plenty of tax to be saved there.
Well, and a lot of that comes down to whether you're taking the money out of the company or not, doesn't it? And that's where you probably hear us talk about Division 7A. That's where, is that one of the other things we need to watch from a tax perspective?
It certainly is. If you can take advantage of the corporate tax rate because you're leaving the money in the business, that's great. You park your tax rate at 25%. But if you want to take that money out, there's various ways and means in which you can take that out tax effectively, and that's when we start talking about Div 7A, which I know is a bit of jargon, but it's something that it has to be managed for tax purposes, but it can be actually managed really effectively for tax purposes.
And so the big part of that is making sure we've done our minimum repayments for the year, isn't it?
Correct. You've got to comply with all the rules associated with the Div 7A loans, otherwise the ATO gets cranky, so you need to get that right well prior to 30th of June.
What's another one that you see people getting the biggest bang for buck for?
I like superannuation as a way of tax effectively managing your money. Disclaimer, no financial advice there, but from a taxation perspective, it's a really good one that you can use to minimise your tax. However, it's very, very time sensitive with regard to when you actually make payments.
Yeah. So
So you need to make the payments at the right time, otherwise you lose the tax benefit. And slightly off topic, but from a tax compliance perspective, if it's super for staff, if you don't get those dates right, there can be some fairly hefty penalties.
Yeah, so to get the deduction for your super for staff, you must pay it and have it clear your bank account by the 30th of June.
It needs to be in the hands of the super fund prior to 30th of June. So we're always saying, week and a half out from 30 June is when you should be making your super payments.
And superannuation wise, if you're getting a personal deduction for super, that can be worth 47 cents in the dollar.
Absolutely, absolutely. So that's why I say it's a great mechanism by which you can actually get some really tax effective savings in the company or as an individual.
And what about one more that you talk to clients about a lot?
Car logbooks. I know they're a pain, nobody likes doing them, but if you use your car a lot for tax purposes, they're a great way of actually getting some really good tax benefits. On the other hand, if you're actually trying to claim and you haven't got a legitimate or a compliant logbook, it's when the ATO can really come in swinging. So logbooks, massive pain, but they last for 5 years, so get it done and then you'll maximise your tax benefit on your car.
Thank you, Bradley. You can download our Top Tax Tactics ebook below. Of course, you can also subscribe below as well, but if you do have any questions, please reach out to your usual contact or via the website businessdepot.com.au.